Today, I am going to compare the difference between two people that make the same income, but they have two different credit scores. If you don't know who I am, my name is Kenny Johnson. I operate a credit repair company here in Montreal, Quebec, and we have clients all across Canada. If you are located in Canada and you need help with your credit, you can always send us an email and we'll be more than happy to assist you. So, to jump right into the topic, let's go ahead and get into the comparison. So, person one makes $100,000 per year, and person two makes $100,000 per year. Person two has a 730 credit score. Let's just say 730 credit score. And person one has a 650 credit score. Now, they both go to the bank, they both go to an A lender, and what they're currently looking for is an unsecured credit card with no annual fee. They're just trying to get an interest level card, okay? This could be the Amex Green card, this could be the CIBC dividend card. It doesn't matter. It's an entry level cashback credit card. Now, when they go and apply, they both actually get approved. But here is where the difference takes place. With the person one, they're probably going to get approved for, let's say, a $2,000 to a $5,000 credit card. So it could range from $2,000 to $5,000. With person two, they can get approved anywhere between $10,000 to $35,000 in that range. Okay. And now you may see this comparison and you may say, obviously, I want to be person two, right? You obviously want to be person two because there's a lot more capital there. It doesn't mean that you have to use the full $10,000 to $35,000. You don't have to use the full credit limit, but you have access to it. Same for person one. You may get approved for the $2,000 to $5,000. You don't have to use that full credit limit that you have access to, but you have access to it in the event that something does happen or you actually need to use all, that credit card, right? But in the game of credit, it's all about having access to the capital. And so you see these scenarios and you say, okay, I want to be person number two. And so if you're currently below a 730, I said 730 earlier, but really conservatively, I would say a 750. If you're below that threshold, then hopefully this comparison wakes you up and it says, okay, now it's time for me to focus. I probably should focus on my credit because when I go and I apply for a credit card, when I go and apply for a loan, I'm going to get more out of that application because of my credit score. You could be making $200,000 per year and you can have a 650 credit score, but that person that has a 730, a 750, and they're only making $100,000, they're still going to get more for that application. They're actually in the marketplace, they're more valuable to the banks than you that makes twice as much. And the reason why that happens is because they have data that shows that they have a great track record of being able to make on time payments every single month. And you have to place yourself in the shoes of the lender. Would you be willing to lend money to the person that shows that they can always make on time payments? They make $100,000, or would you be willing to lend money to the person that makes $200,000 but you see that every account that they've ever had, they've been late on some of the payments. They may have one charge-off account on their credit report. Who are you going to lend to? Because they're both going to be able to make the payments. They both make a decent salary, right? And so the credit score also says more than just the fact that they can make on-time payments over time. It also shows that they have a low DTI. If you don't know what DTI is, it's debt to income ratio. This also correlates over into utilization. They're not carrying a high balance because your utilization makes up 30% of your credit score. And so you can't have a 750 with a high utilization. So if I could look at someone's credit score and say, well, they have a great DTI, they do really well with their utilization, right? So I think you want to be person number two before you go out and fill out an application. Yes, because one of the most common questions I get all the time is, "Hey, when can I go out and I can apply for credit?" You can go out and apply for credit with 650. I've seen and I've told people not to do it, but they've stubbornly done it. They go out and they apply with a 650 credit score, they get approved and they're happy and they're elated. But the problem is that they left so much money on the table. They left more money on the table than they would have because now the only other way that they're going to increase that credit limit, let's just say for person one, they got the $2,000 credit card. The only other way they're going to increase that credit limit is by going out and get other credit cards, which means you would have to submit another application, or you need to wait 6 months to request a credit limit increase. When you could have just actually just waited, worked on your credit, and got 4x, 5x the money on that first application. So sometimes we see the credit scores and we put very little importance. A lot of people try to downplay what the credit score is. But when you have a great income combined with a great credit score, it opens the door to so many other opportunities. This isn't just with credit cards, it's with line of credits, it's with loans, it's even with a mortgage. You may get favorable interest rates because lenders are going to not only look at your income, they're going to look at your credit score because there's so much data behind the credit score. And you may often hear me say, don't focus on the credit score, focus on the data. A lot usually these are interchangeable, the credit score and the data behind the credit score. Once you learn more about credit, you're going to learn on how to look at a credit profile and see what information you need to be working on so that regardless of what your credit score is, you're not really worried about that. You're worried about the data, right? So like your credit score is going to constantly fluctuate. Like, for example, I think the last time I checked, I was at an 850. That can go up. It could jump up at 20 points. We don't know why. Equifax and TransUnion does not share this information on why credit scores jump up and down. They give us clues. They say, well, you may have carrying a little bit more balance on your credit card than what you typically do, but your credit score can jump up and down. It can go up and down month over month over month. But what's more important is that you can look at the data and see what's going to allow you to get approved. Because I can submit an application and I'm going to check a few things off of the box. The first thing, when was the last time I applied for a credit card? If I look at my inquiries, and I'm going to look at both Equifax and TransUnion, when I look at the inquiries, when was the last time I submitted an inquiry? When was the last time I submitted an application? If it was in the last 6 months, I don't care how good my credit score is, I'm not going to apply because I want to give myself the most favorable odds because I know that if I submit that application, I'm sending a message to the lenders that I'm probably desperate. And yes, 6 months is conservative. I'm going to be more conservative in my approach when it comes to finances because I have to do what's, what's best for myself. You can get away with a 3 month window, but again, I feel like that's kind of short. And what I've seen happen in practice is a lot of people build up a bunch of inquiries, which again, that data makes your credit profile looks poor over time. So if you're applying for new credit cards every 3 months, I mean, it's not going to take long before you have a list of like 20 inquiries and then you go out and apply for that next credit card or that next loan or that next line of credit or the next auto loan and you're denied, right? So again, let's take the conservative approach. Let's know how to look at the data and let's give ourselves the best odds of being approved. And let's not be impatient when we go out and we apply for products. Let's not say, oh, I'm at a 670, I should be okay. Like I'm ready for credit now. Like be patient, take the time because you're gonna get so much more money uh, out of being patient. And I know patience is tough because we're in such a consumer society. We look on social media every day. Have nice cars, they have nice things, and you want to say, I want to go out and do those things but you are going to have an easier time getting access to a loan when you put yourself in a better position, not only with your income, but you can combine that as well with your credit score. Now, if you're currently struggling with your credit score and you need assistance, maybe you have some collection accounts, maybe you have some old derogatory accounts that shouldn't be reporting or they're improperly reporting. I want you to send us an email info@kennyjohnsonuniversity.com. And what we'll do, we'll get on a free consultation call with you. We'll discuss some of your options, how we can help you some of the steps that you probably should be taking to improve your credit so that we can get you up to that 730, that 750 range. So you can always send us an email, info@kennyjohnsonuniversity.com. And until next time, peace.